Hello, guys. This is Keith here with your more insurance advice, more expert advice. And today we're going to be talking about, the goal and the hidden danger really behind low home insurance premiums and what you need to check. So, for one, of course, you think your home insurance premium is too good to be true. It probably is, and many homeowners are severely underinsured without even realizing it until a disaster strikes, right? Until your house is on fire, until a pipe bursts, you don't know that you're underinsured. So today I'm going to show you how to use appraisal records, reconstruction cost tools, and other key data just to make sure that you're properly protected. Again, most people don't realize they're underinsured until they file a claim. So this is a small way to get it checked. That's way you know exactly what you're getting and if it's actually valuable or not. So reason number one, your home's appraised value and reconstruction costs. So most people think is they look at their county appraisal district home value as in their appraised value and assume that's what their insurance should cover, or they look at their loan value and how much they're purchasing a home for and assume that's what the insurance should cover. But the appraised value is not as the same what it costs to rebuild your actual home. So your county appraises your home at 250,000, right? If a fire destroys it, the reconstruction cost is actually 325,000. So if your insurance only covers that amount, then you're left out of pocket paying that extra 75,000 to rebuild that home. And a lot of people get in this situation where they're $100,000 underinsured or they're $75,000 underinsured and they have to forfeit the home essentially. They can't rebuild the home and they still have a mortgage that they're obligated to pay, that the bank is going to make sure that you pay, right? So you're left on the hook for that remainder. And there's a different ways you can check this. So you can use your county appraisal district website just to find your appraised value. If you just look up my county appraisal district, you can search in your property address and you can see what your home is actually appraised for, and then use the reconstruction cost as estimator like Marshall and Swift or CoreLogic or Insurer Tools, just to get the true rebuild costs. And they're really quick, simple websites that allow you to at least see the rough estimate of how much it costs to rebuild your home. So again, your insurance should cover what it costs to rebuild, not just what the county values your home at for tax purposes, or not just what your purchase price is on a home. That's not how it works there. So reason number two, insurance companies may lower coverage to offer a cheap premium, and they'll switch things like reconstruction or replacement value and actual cash value when it comes to your reconstruction. So what happens, when you get cheap insurance? And what happens with cheap home insurance, right? So insurers will lower your dwelling coverage, as in your reconstruction costs to rebuild your home, below the actual rebuild cost, and they might remove key endorsements like extended replacement costs if your home is older than maybe 25 years or so, and guaranteed replacement costs to make sure that you get the full value of the items that it costs to rebuild your home and not the depreciated amount whenever it comes to rebuilding your home. So those are two key differences in actual cash value. If your agent has not even told you this, it's a huge red flag, because actual cash value is going to account for depreciation, wear and tear. It's going to account for the amount of years that you've used a certain item or the amount of years that you live within the home when your policy was enforced. And replacement costs is the better one. That's the one that I offer all of my clients. You're going to get full replacement on all the value that it costs to rebuild your home. That costs for lumber, labor, transportation. Extended replacement cost is going to add to your replacement cost coverage to say, okay, if there's inflation that is regarded with the cost of lumber, or there's low amount of availability for transporting goods. When COVID happened, that was one of the biggest things, and people weren't able to get their homes rebuilt within a timely manner. So extended replacement cost is going to account for that, that lost time, and then also inflation as well. So you just have to ask yourself, would you rather save $20 a month or $50 a month on your home insurance and your escrow account, or be paying $100,000 out of pocket later when your policy doesn't fully cover your rebuild, right? So a good policy is going to give you guaranteed or extended replacement cost coverage, at least 125% or 110%, of the home's reconstruction value. And it's also going to match materials, and it's going to give you inflation protection if there's ever a situation like COVID again, right? So if your agent then explains what happens, and your home costs more to rebuild, you could be left paying the difference. You could be left paying what they didn't go over and didn't actually inform you about when it comes to your home insurance, right? So reason number three, market value versus reconstruction cost, why they are not the same. And I've ran into this multiple times where people think, hey, I'm purchasing a home for 500,000, my insurance should cover 500,000, right? most people just assume that insurance should match what they paid for a house or what they could sell it for. And that's not the situation at all. Home prices and reconstruction costs are not anywhere correlated because the price to rebuild your home versus the price to put it on the market are completely different things. You know, when you purchase a home, um, if you look at your appraised value, it's going to give you the land value of your home and it's going to give you the home's value. So when you buy a house, you're buying the land and the home. So those are two different values combined to give you your appraised value. Now, with your market value is going to make sure, okay, within this zip code, within this neighborhood, there are homes selling above, this certain amount. So now your home is priced at that amount, right? If your neighbor sells their house for $1 million, your home is worth 925. Your home could go on the market for, 1.1 or whatever it is, right? Just to give it some competitive pricing. But if you bought a home, say for 200,000 5 years ago, today it actually costs 275,000 to rebuild due to inflation and material costs. How much coverage do you think you actually need, right? I want you to maybe answer that in the question or in the comments. Sorry, answer that question in the comments. Just whatever your home's market value is and how much your insurance is actually covering. Do you think they're giving you full protection and hedging your inflation costs, your cost to rebuild, and everything like that? So, how to really check this within your current policy and just compare your current home value to your construction cost trends in your area. And if you don't have anybody to do that, I'll be more than happy to review your policy and make sure that, just within your area that things are properly protected and that your home is going to be rebuilt. You can, again, use reconstruction cost tools or just ask your agent for an updated evaluation to make sure that you're fully covered whenever, it comes to your home insurance. And if they are not open to giving you that full valuation report, it's a huge red flag because that means that they know that they gave you a super low premium, they gave you actual cash value, or they gave you the minimums when it comes to your home insurance, right? So, number four, cheap policies just often cut out key home coverages. So, what happens when they, give you cheap home insurance? They remove additional living expenses. So, loss of use coverage is your coverage D. If you look on your policy, they also, you pay for your hotel, your food, and expenses out of pocket if there's ever a fire, if there's ever a disaster. So, loss of use coverage, in essence, really is if your home burns up, if your home is unlivable for a certain amount of time and it needs to be rebuilt, things need to be remediated within the home, you'll have loss of use, which is okay. Say my home burns down and it typically takes 18 to 24 months to rebuild a home on average, right? So I have 24 months of coverage of usually a percentage of my dwelling costs to live and pay for my expenses, maintain my standard of living, whether that's a rental property, an apartment, whether that's an Airbnb, whatever it is, you have coverage for that to pay for those expenses and not come out of pocket for rent essentially for a whole new home, right? So that's what that covers. And, you know, if you have to ask yourself too, if your home is unlivable, would you rather insurance pay for a hotel or Airbnb or a rental property, or would you rather just come out of pocket for months, right? Some people are in a unique situation where they can go stay with their family, but if you own a home, I'm sure you don't want to go stay with, your uncle, your grandma, whoever it is, for 24 months, right? Like that's a long time. That's 2 years in total. So a good policy is just going to give you at least 12 to 24 months of additional living expenses based on your situation and make sure it fits your needs. It's going to give you enough to cover the rent, the food, the necessary costs while your home is being rebuilt. So, again, if your home burns down and your policy doesn't cover temporary housing, where are you going to stay, right? Like, where are you going to move? Again, people in California were experiencing this because the FAIR plan in California doesn't offer the full 24 months, and I think it's about 10% whenever it comes to your loss of use coverage. So I looked into that, and there's a whole bunch of people having to literally just leave the state because they didn't have anywhere to live, anywhere to ground themselves while their home is being rebuilt due to all those fires, right? So it's a pretty good example to kind of outline why loss of use coverage is so important. Reason number five: commercial owners face the same risk as well. So if you have a business, you have a small business, you have a brick and mortar business somewhere, with commercial insurance and where you get cheap commercial insurance, companies lower your property replacement cost and offer a really, really low premium. So they're gonna, you might get a quote from one lady that's quoting you 3,500, and somebody from another company might give you 1,500, right? Like there's something that is wrong with that policy that $1,500 policy, um, and especially if they didn't go over the coverages and they're just shipping out a number, right? That's a red flag. So business owners don't realize their policy won't fully cover damages until they file a claim. So that's one of the biggest things that happened in COVID as well. It also happened in 2021 with the pipe burst. There was a lot of businesses in Texas specifically that got shut down for a short period of time, and their policy didn't cover, all the damages occurred in that brick and mortar business or in that business property that, could have paid out if they just had a proper agent, if they went about their insurance the right way, if they made sure that they were informed. And, it could just be because people don't know, but again, you have to check on these things whenever you see those red flags with pricing. So again, if your commercial building burns down, your policy covers half the rebuild cost. How are you going to reopen your business? How are you going to get back to the same standing that you were before insurance was used, right? And that's literally the definition of insurance, is to put you back in the same spot that you were before a claim, right? With your auto accidents, it's putting you back in the same spot, whether it's getting the same vehicle, whether it's repairing the vehicle. With your home, it's, if your home burns down, we're going to rebuild your home to the exact same value to put you back in the same spot you were before this disaster strikes. So again, a good policy is going to include, for commercial specifically, guarantee replacement costs on commercial property, business interruption coverage to cover lost income, due to maybe a pipe burst and maybe a fire, whatever it is. And a cheap policy might save you now, but if you could, you know, kind of project, that thing is going to put you out of business later, right? You wanting to save an extra $1,000 a month for your commercial insurance, that's going to put you $50,000, $100,000 in debt to your own business whenever that disaster does strike. So really, your home insurance should just protect your investment, not just look like a cheap number on a piece of paper. If you want real coverage, using appraisal records and reconstruction cost tools that are actually validated with the claims processors, with the actual people that come in and reconstruct your home, the same thing that they look at, that's the thing that I look at. So if you're open to that and you want me to look at your policy or make sure that you have proper coverage, shoot me a DM, shoot me a call. There's my website in the link in the bio, so you can click there. All my information is there, along with the business that I work with. So again, I just want to make sure you guys are educated and protected. I don't want you to be in a situation where you have you're experiencing what some California residents are experiencing, or you're experiencing what North Texas experienced in 2021, things like that. So again, I appreciate you guys for watching the video. My name is Keith. I look forward to speaking with you guys tomorrow. Have a great rest of your day.